All right, good afternoon, everyone, and thank you for joining us today for the MRCA Steep Slope University webinar on how to account for overhead in roofing. Today's webinar is part one of a two-part webinar series designed to provide you with valuable information to help improve the project bid process and general business management. Part two of this series is going to happen in a couple weeks on September 8th. It'll be the same time of day, 1 Central, 2 Eastern. Topic then will be lump sum estimating, and our presenter will be Steve Patrick of Leveling the Playing Field. Before we get rolling here, I just wanted to do a housekeeping item, which is if you have questions, you guys are muted as attendees, so we can't hear you, but you can use the chat feature in the Zoom. If you move your cursor around, you should see a chat button pop up. You feel free to enter your questions in there, and we will, I'll let Dan know there's a question and he will respond as we go along. And I am pleased to introduce our presenter today, who is Dan Pitts Jr. of Pitts Roofing Company in Fort Worth, Texas. And Dan just passed his 13th year anniversary in roofing. He is former president of the North Texas Roofing Contractors Association, NTRCA, and also the Roofing Contractors Association of Texas, RCAT. And Dan received his BBA in finance from the University of Texas at Arlington and his MBA from Texas Christian University. Dan also holds a master's degree in industrial distribution from Texas A&M University. Dan, we're excited to have you today and learn about this topic. So I am going to turn it over to you and we can get started.
All right, very good. Thank you. Can you hear me okay?
Yes.
Okay, great. I think I must have sent you the wrong information. This is my 30th year. So I'm
that makes sense.
just past 30 in mid-July. So
great.
Yeah, too stupid to get out of the roofing industry. So I'll just leave it at that. Anyway, thanks for having me. I look forward to this. It won't go over an hour. It'll probably be around 45 minutes or so, but hopefully I'll give you a lot of good information that will help you with your businesses. Also, about 2 months ago, I got Bell's palsy, which is like if you've ever had chicken pox, it can paralyze your face. So if I start to slur, I promise you, I'm not drinking. It's a result of that. So hopefully it's gone away enough you can't tell it, but I can tell it when I'm talking. But anyway, all right, let's get going. So like I said, like Megan already said, this is my 30th year in roofing. I enjoy this industry. It's a lot of fun. There's a lot of competition here in the DFW area, so it's a challenge. We already went over that stuff. I was also that I feel like has helped me. I was in the Air Force and the Air Guard as a contracting officer and a contracting specialist, and I did that for most of my career. Part of the time I was a first sergeant, but I did a total of 24 years. So I analyzed contracts for construction at the base level, and also when I deployed, I did them at the contingency level like in Bagram Air Base in Afghanistan, and then Turkey, places like that, Germany. So I analyzed contracts and pricing data, and so I've kind of got a little bit of a background in that before I went to college. All right, so this class is about overhead and how to account for it in your businesses. So basically this is kind of the boring part of this. There's two kinds of accounting. There's financial accounting and there's managerial accounting. So financial accounting is where you're looking back and there's strict rules on how you do it. They're called generally accepted accounting principles, or GAAP. So people that need that kind of stuff are your banker, investors, or if you're doing your taxes, that's the kind of stuff you do. What we're talking about today is to help you in your bidding process. And that's managerial accounting, and there are no rules. So you just do it any way you see fit when doing your budgeting. So that's what this is about. So we're not going to get into GAAP. I'm not even sure I'm authorized to talk on it. I'm sure I passed a test on it at some point, but I'm more focused on managing a roofing company. And so let's dive right into it. So what is overhead? Overhead refers to the ongoing business expenses that aren't directly tied to your product or service. So you know, if you're preparing bids or estimates for your customers, your direct labor, your direct material, that's not overhead. But your office rent or your telephone would be. So the trick is, how do you allocate that properly with some sort of system to where it's somewhat accurate to price it into your bid. So there's a lot of ways to do it. This is just one way that I've figured out how I do it. And I'm not saying it's the best way, I'm saying it's the way I figured it out, and it seems to work for me. During this program, here's what I would like for you guys to get out of this. I want you to be able to identify your company's overhead costs and be able to quantify them. I want you to be able to determine your firm's production capacity. And then as a subset under that, figure out what your production days available to you are, and then how to allocate your overhead based on those production days, per department. So for example, if you do both residential and commercial in a sheet metal department, how do you allocate your indirect cost to those three departments? And is it efficient? Are you putting too much in one and you making you uncompetitive in that area and maybe too competitive in another? And then also, I'd like for you to take from this why linear pricing is a fallacy. And when I say linear pricing, that's like, say, Xactimate pricing, where people are, you're giving you X amount of dollars to tear off X amount of dollars to put on the roof system. And there's no real, it's just linear. If there's 1 square, it's 1 times the number. If there's 30 squares, it's 1 times that 30. So it's just a linear pricing model. Ultimately, I want you to be able to determine your daily overhead rate or your hurdle rate and how to allocate it within your business. So think about this. What is your overhead rate? Do you even know what your overhead rate is as a percentage or as a dollar? How many of you think it's 10%? That's what you always hear. Hey, you're going to get you 10 and 10, 10% overhead, 10% profit. And, sometimes you get it, sometimes you don't if it's an insurance project. But is that really your number? Is it higher? Is it lower? To me, it's all over the map compared on what you're doing. So how many of you think that Xactimate pricing is accurate? It may be, it may not be. It depends on your business. By the end of the presentation, I want you all have the skills to determine what your overhead is and why the straight line or linear pricing is not correct. All right. So what are the components of how you determine your price? So if you're preparing a bid for a customer, what are the things you're going to be putting in there? So you're going to be putting in, and this is at a high level, okay? So you're not talking about all the screws and all that stuff, but in general, you're going to figure your materials plus labor plus your overhead plus your profit to equal your price. And if you underestimate your materials, what component suffers? The profit does. If you underestimate your labor, what component suffers? Profit. And then likewise with overhead, it all affects profit. And if you underestimate any of those, you're not only going to affect your profit, but you could be affecting your overhead allocation because you have to pay your material, you have to pay your labor. Ultimately, you're going to have to pay your overhead or you're not going to stay in business. And ultimately, you need to make a profit or you're not going to stay in business. So determining your price is one of the most important things contractors can do to become profitable. I think it's maybe the most important thing you can do. All right, so some overhead examples. So you got rent, utilities, office staff and supplies, travel expenses, accounting and legal expenses, property taxes, advertising expenses, fuel expenses. All those things are incredibly hard to track to one project. If you're doing a couple of hundred projects a year, how do you allocate? You just take those, say you spend $20,000 in rent and you're doing 200 projects. Are you going to allow $10 for rent in each one of those? Or how are you going to do it? I think one of the ones that gets a little tricky is insurance. Is insurance overhead? And my answer to that is it depends. It depends which insurance you're talking about. Are you talking about your property insurance where your business is located? I think, yeah, it's overhead. Or if you're talking about your vehicle insurance, yeah, that's overhead. Or your inland marine policy, that would be an overhead item. But if you're talking about general liability for the construction side, in my opinion, that's a direct cost, because you're not going to have that cost if you're not doing that project. You may be paying a premium, which makes it appear that that's an overhead expense and it affects your cash flow, but ultimately you're not going to owe the general liability or workers' comp unless you incur the cost. So to me, that should be separated and should be a variable cost along with material and labor. So those overhead insurances, they are the reason I treat them as overhead is because they keep accruing whether you have projects or not. It doesn't care if you are doing 1,000 projects or one project. You're still going to have to pay for your building insurance, your vehicle insurance, your inland marine policy. But likewise, on the workers' comp, those expenses are not accruing if you don't have projects. So if any of you have questions on that, please go ahead and ask, and I'll try to be more clear. But that's the way I separate it out. I take general liability, workers' comp, I treat them as direct expenses. All the other insurance I treat as overhead. So overhead versus direct cost. Overhead is a fixed cost. Direct costs are variable. So you don't have direct costs if you're not selling and performing projects. Your overhead just keeps coming every month. The bills just keep coming whether you're productive or not. So here's an example. This is for shingles. I made some assumptions here. So I put the selling price at $360 per square. I put materials at $125 and labor at $90. And the bottom row, the x-axis is that's the number of squares. The y-axis on the left, that's the dollars. So that's linear. So the blue is the revenue, and the orange color are the expenses. So it's just, it's one for one. Every time we have 10 squares, we're going to be at $3,600 with approximately $2,300 in expenses. And that number just carries out in a straight line, but that's not reality, is it? It's you got the same example in your if you have a $2,000 a day overhead, then you're that's the red line there. So you have $2,000 a day, whether you sell 5 squares or 50 squares, it doesn't matter. You still have that expense. The revenue is still going up. So here I combined them on the next slide here. The red area is materials, labor, and overhead combined. Somebody smarter than me can figure out how to separate it in the graph. I just combined them because I couldn't figure out how to do it real quick. So anyway, just know all the red is materials, labor, and overhead. So what happens is, you can see down here, there's a break-even point approximately at 14 squares. So under 14, your overhead, when you add it to material, is higher than what you're getting in revenue. Once you pass 14, now you're starting to become profitable. This doesn't even account for a sales commission. So if there's a sales commission in there, that number, that break-even point would move to the right. It would be a little bit more. So this is what I mean by not being linear. You're going to have a profit target on top of that, which we're not even really discussing today. But how can you meet your profit target unless you're taking projects that are big enough, and then your crew can handle that that are profitable? You really can't control demand because, or you can control what you do, I guess. If you're getting calls and say the houses are 20, 25 squares, and you've got a bunch of them, they're killing a whole day to do each. You may not be getting enough revenue to cover your profit target. You may be covering your overhead, but you're really not making a lot of money. So you might want to target some bigger homes and reject those smaller ones. Or the other thing you could do is raise the price on those smaller homes, but you're likely not to get them. So you need to really kind of figure out where your sweet spot is and what it costs you to stay in business. Otherwise, you could be taking on projects that aren't very, very profitable. So is it clear why straight line or linear pricing isn't adequate? Hopefully you can see that here. And this doesn't apply just to this residential example. It could be a commercial example as well. You need to be charging enough money or rejecting those projects that are not profitable if you're constrained by the price. If it's an insurance project and they're going to give you X amount, if you can't get it supplemented to where you need to be, you probably need to walk away from the project. Or the other option you have is increase your capacity as a company so you can do more projects. So you're dividing that overhead over more projects and more squares. But if you're going to stay the same size company, you've either got to reject it and take on bigger projects, or whatever your sweet spot and your comfort level is for your company. So how many production days do you have? So we all have 365 days to deal with. And then you need to take a look at your business and how many days a week do you work. If you're doing a lot of government work on military bases, a lot of those, they work 4 days a week, and like Tuesday through Friday or Monday through Thursday, and then you have a 3-day weekend every weekend. Or maybe you have your commercial department does military work, but your residential stuff you're going 6 days a week. So you've got 2 different numbers to deal with. But you need to figure out if you're doing it the same across the board, or you might have to mix how many days a week you're working. If it's 4, 5, 6, possibly 7 days a week. I don't think too many people do that, but I think the 2 most common are going to be 5 or 6. Are you working 5 days a week, or are you working Saturdays as well? So how many holidays do you give your employees, or how many? They don't necessarily have to be your employees. They could be subcontractors. If you're not working on Thanksgiving and Christmas and New Year's Day, I mean, they might not be your employees, but you're not getting production done. So it affects your production. And then how many days do you lose to inclement weather? I'm in the Dallas-Fort Worth area. We don't lose a lot of days. We have some rain days that we get. We don't get a whole lot of cold weather days. We get a few, but we get some to account for. This summer, our hardest thing was really hot days. We had a good probably 40 days where it was 100 plus. We still worked, but you don't get the same production when it's 103 as you do if it's 90. I mean, A, it's really tough on your crew, and B, it's starting to tear up material that you've already laid down. So you may only be working 60% of the day or 70% of the day, and you're not getting the production you need. What was a one-day job is now a two-day job. So let's go. I'm going to go to, I made a spreadsheet to show you how I calculate how many days are available. I'm going to have to stop sharing this and go down here to okay, so here's the days available. This line right here, this line 3. So January through December, you just adds them up. I summed them right there. That's 365. If you're working Monday through Friday or Monday through Saturday is 6 days. That affects it. I think most people are Monday through Friday. So that takes away a lot of days. So that now I'm down to 261. And then holidays in January, most people recognize the 1st. February, none. March, none. April, none. May, you have Memorial Day. July 1st or July 4th, there's at least one day, sometimes two. If it falls on a Thursday, you're probably not working Friday. We don't, but August, none. Usually September, there's one, and then 2 in November, 2 in December. So that's a total of 8. So that knocks your production days down from 261 to 253. And then you got to account for rain days and cold weather days. So how I do that is I just show you, stop sharing. And I use I go to weather.gov, and this is my area right here, this Fort Worth. And then you can do this for any part of the country. So DFW comes up here, and then I look at the daily. Actually, let me switch screens here. Sorry about this. Okay, hopefully you can see this. So the monthly, say the precipitation, this is from 2000 to 2022. And I want to know what the number of days, the rain days there are. So I want to know the greater than or equal to, sorry, I can't see my screen very well. And then hit go, and it'll print out I did something wrong here, sorry. There we go. I forgot to put in the day. I'm sorry. Forgot to put in the how much rain. Okay, here we go. So it gives me all the, this is how many rain days we had for 20 years. So you can enlarge it, and you can go right here. I figured this out one day, and I can copy it, then right click it, and then I go over to, I'll show you where I do with it. I go over to
Hey, Dan,
yeah.
I think you need to reshare the screen.
Oh, okay. Sorry about that. It's not allowing me to for some reason.
Okay, I'm checking on my end to see if there's any reason it's preventing you. I don't see it.
Yeah, it's not, when I'm hitting the Zoom link.
Yeah.
Oh, here we go. Here we go. I know what happened. All right. So I need to share. So I right clicked it, and then now can you see the spreadsheet?
Yeah. Yeah.
Okay. So I right click that data, and then I just paste it into a spreadsheet. So it takes it directly there. You don't even have to reformat it. And so now I've got the year 2000 through 2021. That's actually 21 years. And I just take the average. I used Excel and I average it out, and it tells me what the average rain days are. So I can look at the minimums and maximums. And so that affects, I do that. Now, if I change to cold days, can y'all see that? Can you see that, Megan?
Yes. Yeah.
Okay. So I put that under 32, I think, and it showed me how many we get. So we don't get a lot here. Then hot days, we got June, July, and August, a little bit of September. And I go to all that stuff and I put it in here. And ultimately, it takes out those days. And we end up with about 186 days in the Dallas-Fort Worth area that are good for roofing. If it's going to rain, we don't tear off, so we're losing a day there. So that's how I get to that number. So that's important because I need to know what my overhead is, and then I need to know, I don't divide it by 365 because we're not working every one of those. So it's right at pretty close to half. We get 186 days. I don't take out the hot days because we still work those days, but we plan on, depending on how hot it is, that we're not going to get the production that we are used to, whether, if it's in March or April or October. In the middle of August, it's just not feasible. And then we also try to save our easier projects, in August for the up and over 512, and then skip the 80 square, 1212. That's just not, it's not good on the guys, and you end up tearing up the roof. So if we've got a lot of inventory to backlog of projects, we try to save those harder ones for those tougher, hotter months. So we get all that data in. Ultimately, I'm looking for this number right here, this average number of work days for the year. And it's not exactly right because this weather can vary, but it's a basis for figuring it out of what is it probably going to look like, give or take, to where we can make an educated guess. So let me go back up here and share. Stop sharing. I'm going to go back to that spreadsheet. I mean, that PowerPoint. Okay. So, dang it. All right. So let's just pretend we got this fictional roofing company here. It's got 3 departments. We have a commercial crew, we got a residential crew, we got a repair crew. So we'll make it pretty simple. And then, so how do we allocate the overhead between those departments? So on the commercial crew, let's assume we got 10 guys. On the residential crew, 8. And the repair crew, there's 3. Okay. So that's a total workforce of 21. So that means that the commercial department has 48%. They have 10 of the 21, which is 48% of the crews. The residential crews at 38%, 8 of 21. So you get 8 divided by 21 gives you 38. And 3 divided by 21 is 14, for a total of 21 people total. And I rounded up. So it was like 47 point something. So I rounded that up to 48. So like I said, it doesn't have to be exact. You're just trying to get a good budget number. So with this fictional roofing company, let's pretend that our total overhead for the year is $480,000. And we have 186 days. So that means we have a $2,581 a day overhead or hurdle rate we gotta cover before we make any money. And I also suggest that you put yourself, if you're a business owner, put yourself in the overhead because you need to get paid. A lot of guys here that put themselves in the profit end. Well, if you're not there, you need to hire a manager. You need to, and whatever that market price is for a manager, you need to pay yourself and then get paid there and then get paid in the profit end as well. But if you don't budget for it, it's hard to achieve it. So your commercial department at 48%, that's $1,239. And how I got that is I've got the 480,000 divided by 186 gives you $2,581 a day. 48% of that is $1,239. The residential is $981. And then the repair department is, dang it, is less than that. I can't see it because there we go. It's $362 a day. So they're all proportionate to how big they are in manpower. That's just how I choose to do it. I'm not saying it's 100% right, but that's just how I do it. So let's just take this company and let's take a couple of scenarios with the commercial department. Let's say you've got 100 square TPO system you're replacing. And you say, all right, we can do this job in 5 days and we're going to need another day to mobilize. So it's going to take you 6 days. So you got this $1,239 a day times 6 is $74.34. And if you divide it by the squares, it's $74.34 per square. All right, so here's another project. Let's assume you've got a really congested 200 square TPO roof system. So there's pipes all over the place and roofs and HVAC system, rooftop units are up there. And it's just, it's hard to, you just can't get up there and kick out a big roll and put it down. You've got to constantly be cutting it and welding it. So you determine this 200 square job is going to take you 15 days. And it's going to take you 2 days to mobilize, tearing up, tearing down. So you take that $1,239 times 17, it's $21,063. Well, that makes the overhead per square $105.32. So you've got about $36 difference per square, even though it's the same daily rate. This per square rate is different. So that's why I'm not saying I ignore Xactimate. I use Xactimate as on an insurance job. I use it as a budget, starting budget. But I want to know, is it enough money? And if it's not, is the insurance adjuster willing to talk to me enough for me to justify to raise it? Or, can I bump them anyway to make more profit than, if it's already good? I mean, is there any room to supplement it and, maybe profit take a little bit more? So let's take a residential project. So assume there's a 40 square comp roof with a 912 pitch, and you say, my guys can do that in 1 day. And so your residential overhead allocation is $981 a day. You divide that by 40, it's $24.53. So let's take another project. Let's say you've got a 70 square composition roof with 912, and you determine it's going to take you 2 days. So you still got the $981 times 2 is $19.62, but now it's $28.03 per square. So it's $3.53 or $3.50 higher per square. I mean, that's not probably a deal killer for you, but at least you know it, and you can decide whether you need to raise your price on the bigger one or not. It may have plenty of money in it, it may not, but the whole point of this exercise is to know that overhead, it's a fixed cost, but when it comes across on how it affects projects, it's really variable. The last one here is, let's say your repair department, it's got that $362 a day overhead cost. You got 3 guys, so it's $121 a day each. And if they're working 8-hour days, the overhead per man's 15, 13. That's not counting their taxes like their FICA and workers' comp. That's just overhead, at the office. Could be trucks, could be rent, phones, those things, but you'd still have to add their employment taxes and their insurance and those items. So a little recap is, I think I'm way ahead of schedule, which you guys are probably happy. I'm probably 9 minutes ahead. Hopefully you can determine what your firm's production capacity is, determine the difference between your overhead versus direct cost, determine the number of production days available to you, and then what the overhead rate per department is, and then be very cognizant why the linear pricing is a fallacy. So I'm ahead of schedule. I guess that's good. Hopefully you got your time's worth. Do you have any questions?
We don't have any questions in the chat as you were going, but I'm going to give everybody a couple seconds here to enter any that they might have right now. Dan, I do want to thank you for your presentation today. That was great.
You're welcome.
And while everybody's kind of getting a chance to type in their questions, I just wanted to let you know that I am going to email everybody the presentation from today. And also in that email, I will put the information and registration link to the part 2 webinar in this series. That's the lump sum estimating with Steve Patrick. And then I also wanted to remind everybody that we have the MRCA RCAT annual conference and expo coming up at the end of September 27th through the 29th, and we will be at the Fort Worth Convention Center. And you can find details on that at mrca.org in the conference section. I think we might have, okay. Here's a question, Dan.
Okay.
Is there another way to calculate the overhead allocation aside from number of employees?
Well, there's a lot of ways to do it. One way that I used to do, but I switched from it, is I took total revenue from residential versus total revenue from commercial. And I used to split it up that way. I'd look backwards and see, if I did X amount of residential business in a particular year, and then the commercial, and then I would do the ratios that way. I just felt like I did that for a long time, but I just felt like it was not as accurate as by doing it by manpower. And that's those numbers, if you sub out, you just need to probably count how many crew members that are typically on the crew. Some days you're going to have 7 guys, sometimes you're going to have 8. It just depends on how many the crew leader wants. It could be 6, but as a general rule, you don't have to be too wrapped around the axle about how big they are. But I think that those are kind of averages sizes for our market, 6 to 8 guys on residential, 10 on a commercial job. But that's how I used to do it, is based on revenue. And I would look back at what our ratio was for the year.
We've got a couple more questions here. First one is, couldn't we do a similar method of taking our historical total labor hours and historically yearly overhead to come up with an hourly overhead allocation?
Yes, you can do it. You can do it that way. The thing that I forgot to put in that PowerPoint is if there's any major changes, like if you add trucks or fuel prices going up, you need to probably make allowances for that, because fuel shot up for a while and it's still high, but it's not as high as it was. But I would suggest building yourself a spreadsheet and then capture all those costs. That way you can see how it affects your business But yeah, you can look, obviously, yeah, that's it. I mean, looking back is one way to look forward. But is your business, if your business is growing, are your overhead expenses changing to where you're capturing them? That's what I'm trying to make sure people do. You know, like your historic, our general liability went up this past year, and we had no, our experience modifier was still the same, but you just got to reflect your current cost.
Great. And we've got one more question here, Dan, and it is, what is the most overhead you have seen in your business or your current overhead? And do you show your overhead to insurance companies?
I do not. I do not show my overhead to insurance companies. We run about, it's a little under $60,000 a month is our overhead. But so as a percentage of business, you know, it varies. I don't get too wrapped up on the percentage, but it's usually somewhere between, let's say somewhere between 12 and 15 usually. But if you still have that high overhead and your sales are down, I've seen ours as high as 18. And that's a killer. You know, you either got to cut overhead, or you got to get your sales up. And those were, you know, like, we're a pretty storm driven market down here. And we went through a couple of years with no, you know, not much storm activity, and there wasn't a lot of, you know, residential re-roofing going on. So you got to make it, you know, tough decisions, either cut overhead or somehow get your sales up.
Okay, great. That's all the questions that we have. So,
All right. Very good.
yeah, again, thanks, Dan. And thank you, everybody that joined us today. And be watching out for an email from me. And everybody have a great day. We'll see you next time.
Thank you. Take care.
You too.